In the news industry, we've had quite a dramatic change whereby the traditional industries like the Wall Street Journal or the Murdoch Press or whatever used to have almost a monopoly of news, and that's been largely bypassed now through the blogosphere and through the internet and so on, where people are getting their news more directly from sources, more diverse range of sources around the world, and aren't relying on, let's say, the Murdoch empire to get their news anymore. There's a lot of people on the internet who now feel, in the blogosphere, feel that the same is going to happen in the banking sphere, that you're going to have a disintermediation of the relationship between providers of credit and consumers of credit. And whereas in the past we've relied on banks to provide a professional service to assess risk and to make sure that that's done regulated properly, people have lost faith in that, both because it wasn't regulated well, but also because it was hugely overpriced. And that in future, through the internet, people who need money will come together directly to people who can provide money in a much more direct relationship, and simply the middleman, the banks, will be cut out of the loop, and that could be quite a revolutionary change in which global finance is organised. Now, just a complete paradigm shift, if you like. I was just wondering what your views on that would be.
Very nice. Yeah. There's a second question here we'll take.
Just briefly, strikes me that as things stand, we the citizens, own a good lot of the banking financial industry right now, and it is an opportunity to think through what sort of architecture would be possible or desirable in the future. And it strikes me that quite simply, most people want somewhere safe to put their savings for short-term and for long-term pension or life assurance purposes. And the good old post office might be possibly a vehicle in conjunction with part or some of the pillar banks to provide some of Terrence's public good banking, plain vanilla savings function, separated from investment banking. And then investment banking, we've had an experience of that with the ICC, ACC in the past. I'm not saying it was perfect, but the legislation, for example, governing ICC, perhaps we should look at that again and see, are there aspects of that that could be applied to a new investment banking model, a public investment banking model? Could this be linked to the commitment to a strategic investment bank, which is in the programme of government? One final thing, I mean, this is an interesting discussion, but if I may, just one question in relation to transparency. It would help, I think, public debate if we knew where the €725 million bond that's going to be paid off on the 2nd of November, where is that money going? Who's getting it? Unsecured and non-collateralized, if I'm correct. That will be one point. And the other thing is the total breakdown of bonds in regards to the 6 key institutions that was released on a one-off basis in February. I think as taxpayers and citizens and as stakeholders, it would be good to have that statistical information on a regular quarterly basis. So I'm not sure who could actually deliver that, but it strikes me as basic stuff when we're discussing the difference between 4.4 billion fiscal adjustment this year or 3.6, or pick another figure. These sums are not trivial in terms of the opportunity cost.
Thank you.
Jimmy Stewart has gone, has he?
No, he'll be coming back.
Yeah, because I wanted to really... well, the question, it's quite a quick question. Are we in danger of over-regulating? This stems actually from Stephanie's presentation on Basel III and the need for properly capitalised banks. But the fact that our banks are all owned or controlled by the state today, do we need the Tier 1 ratio, the high ratio that we have today? If they're state-owned, why do we need them to keep so much money? And we know there's a paper to be read later this month which will show that the banks are just plain not lending out to SMEs. So have we gone too far?
Fine. Now, we have to bear in mind that Mr. O'Neill is here on a particular topic, and he may not have or be in a position to answer all questions, and he may not also be in a position to give a personal opinion. But if you'd like to take up a few of the points.
Surely, yeah. Yeah, I'll be as frank as I can. And
So the disintermediation was the first one.
yeah, it's a very good question, but I don't have a very good answer, I'm afraid. We're dealing with a lot of issues in the banks at the moment, and that probably isn't the top of our list of items, as you might imagine. But I certainly believe that there is definitely going to be much more banking in the non-traditional way and in the internet, through whatever way that might come about. There's no question about that. All of the banks in this country are going to have to reduce costs, and the result of that is definitely going to be a much more emphasis on internet banking, and they will all, if not already, begin to invest in that. So yes, it will evolve, and we will have to get ahead of the curve on it. But it's really not top of our list at the moment.
Now, if you could just reply also on Post.
On
that
Post,
suggestion.
well, of course, On Post had a bank, which they closed down only less than a year ago. So I presume that was given due consideration by the government at the time. They handed back their license to us in 2010. But I understand where you're coming from. Yes, it would seem like it could be an institution that would solve perhaps even some of the credit union matters in terms of being a sort of safe haven or a hub or something like that. But it's not really on the cards at this point in time. I mean, it's been closed down, and that's as much as I know about it. You also, I think, asked about the bond.
2nd of November.
Yeah, that's going to be possibly repaid in the near future, and more. And in the sort of mood of transparency to let people know who the owners of those are. I don't know who the owners are. I mean, these bonds are bearer bonds. They're held by whoever they're held by. So I suppose your question is when and if the payment is made that after the event that the names be public. Well, it's not really our jurisdiction to do that, to be honest with you. And the decision to pay or not pay them or not is not ours either. It's the government's.
Okay. And just there was a final point on Tier 1 ratios.
That was the next question, wasn't
Yes.
it?
Are
Is
we
there too much
overregulated?
capital in AIB, basically, I think was
It was Paul Sweeney's point there, yeah.
You know, one of the, I think someone else made reference to this earlier, one of the themes that we are seeing, of course, is that banks must be recapitalised as a means of, well, in Ireland, the banks, of course, the whole sovereign situation in Ireland became, the banking situation became a sovereign situation. So the approach taken was, rather than fix the sovereign and allow that to fix the banks, we better fix the banks and also then tackle the sovereign, which is a slightly longer term affair. So the purpose of fixing the banks was to make them ready as soon as possible to go back to market, so that when the sovereign is repaired to an extent, at least the banks are in a state to get back into the market and fund themselves as much as possible. And that was the logic. But you can see around Europe the same logic being applied now. Rather than fix the sovereign, recapitalise the banks, and see how that will aid the sovereign. So it's almost like treat the cause rather than or treat the symptoms rather than the cause.
Yeah. Thank you. Professor McDonough, would you take up this disintermediation internet banking question?
Yeah,
and is it new?
I think it's an interesting question. Is it new? One of the things which crossed my mind when Fred was asking the question was the question of the Lloyd's partners, I think is the term, where Lloyd's Insurance linked certain people in need of insurance with people with capital which could be used to provide insurance, and the outcome of that was tears, as I remember. I mean, it worked for several hundred years, I think, but it's no longer a viable model, and I think that information problems there are serious. I don't think that all of the sort of sparks and impulses flying back and forth actually add up to information. I think, or there might be a lot of data out there, but not much knowledge. I think it would be very dangerous. I certainly wouldn't get involved in trying to evaluate at a distance people who needed money or wanted my savings. I do think that some of the problems which Damon raised earlier would certainly be relevant here. That is, such a situation would in no way be able to provide capital for public goods. I think it would be even more privatized than the current situation. I think it would be even more short-term in its ability to make judgments, so adapting to long-term, long-time horizon investments would probably not be facilitated by something like that. And on the other hand, perhaps linking local lenders with local borrowers might in fact be something which would be more constructive, I think. I don't think, I kind of remember a lot of how we were supposed to get more choice in what television we watch as a result of all these channels. I haven't seen it.
Thank you.
I have a sort of difficult question for Shane. It's, a lot of activities happening in terms of regulatory changes, and certainly a lot of effort's been put into it. But if one were to think back, would the new regulations in place, to what extent would they have prevented the crisis? And because I think that's really the litmus test. I mean, an even tougher litmus test, almost impossible to answer, will it prevent the next crisis? But is it all meaningful enough, given the difficulties and the complexity? And then I had a question, a comment really on Terrence, and a suggestion, if I may, for task. For Terrence, I thought your points about the public bank were very interesting, but I was wondering if you could develop more. Supposing starting today from the state of the Irish banking system, how would you see some of these banks, for example, being used as good public banks? I mean, what would have to happen? Because you were very schematic. And is it interesting, I mean, we've talked critically about the German Landesbank, but shouldn't we talk about the German KfW, the Credit für Wiederaufbau, which is actually an extremely successful public-private development bank in Germany? Not just criticize the Germans, but maybe learn from some of the good things, because they promote a lot of efficient industry with support from this public bank, and it seems to work very well. So, what kind of elements, and maybe task, this is a theme that has emerged, even though it wasn't the theme of today's sessions, it has emerged as an important theme. What kind of new kind of banking? So maybe instead of just having a very interesting discussion about this, task or FEPS could think about taking this forward.
Was there a question over here? Yeah, no, sorry, there and then at the back. Thank you.
My name is Jerry Hughes from Trinity College, Dublin. We've been talking a lot today about regulation of the banking system, but one of the big players in the financial markets are the pension funds. In countries like Ireland, the UK, Canada and the US, which follow basically the Anglo-American model of funded pension schemes, there's virtually no regulation, as far as I know, of the investment policies of these banks. Now, the regulator in Ireland has tried to influence the investment policy of our pension funds before for 2 or 3 years before the crisis broke. The pension regulator let it be known that he thought the Irish pension funds were highly exposed on the equity markets and that they should adopt a much more conservative policy. That had no effect whatsoever, any more than similar expressions in other countries. So, for example, an OECD report has shown that the consequences of the crisis in 2008 were that pension funds in the UK lost 15% of their value. In the US, they lost a quarter. And in Ireland, which was the worst performer of all, they lost more than 1/3 of the value of the assets. So I wonder what role you would see for regulation in this area in the future.
Thank you for that.
Thank you.
Third.
I fear I've been labouring under an illusion as to what transparency and regulation is and the definitions, because I'm just wondering, if things are getting more transparent, how is it that we have 22 of the former 50 senior Anglo-Irish management positions still in place? How is it that we have talk now about the CEO of AIB that's been recruited having to be paid more than the €500,000 cap? And how is it that we have the Finance Ombudsman on the 6-1 News last night saying that there are as many and the same financial complaints being brought to his office about financial institutions? And I'm just wondering if this is truly a new era, or if the financial sector has just gone into a slight recovery mode. And a question to Professor McDonough. We have 63 billion in recapitalisation gone into the banks. We have 62 billion coming out in bondholders over the next few years, according to the Department of Finance. 30 billion in NAMA, which is off general government balance, and then potentially 75 billion for the Anglo promissory notes up to 2031. Are we going to get a cent of this back? Is there anything in your good bank, bad bank proposal that would see the taxpayer reclaim even a cent of that money that's already gone in? Thank you.
Thank you. Right, first question, if we could have your views, Shane. Would the new regulations have prevented the last crisis? It's not a trick question.
Stephanie said this was a difficult question. It's not, it's an impossible question. I think it would have gone some way. I don't know is the answer, of course. I think the big issue around regulation in this country was the way in which it was conducted, and the tools and the powers that were at the disposal of the central bank. It's not so much to do with the actual rules regarding risk-weighted assets or large exposures or whatever capital rules were in place at that time. And I think it was much more to do with a balance of power and how that power was used and how ineffective it made the central bank, both in its ability to execute, but also in its behaviour. I think that was the key problem, and that's the key problem that needs to be fixed. Would it prevent the next crisis? Again, I don't know. What is the next crisis? It depends what it is. I think it'll certainly people are much more aware. Regulators and bankers have all learned very many lessons. I don't think, in this country at least, bankers are going to behave in the same way. I'm not talking about the international investment banks, the Wall Street banks, Merrill Lynch, Goldman's. I don't know if their behaviour has changed very much, but certainly in this country, banks' behaviour has had to change, and I think that will stick around for quite some time. So maybe it depends when the next crisis occurs as to whether all of this will have an impact or not.
Are you in a position to comment on the last question there about whether there's been sufficient renewal in the governance of the banks?
The reference to why so many executives were in one of the institutions and CEO of AIB being paid more than $5. I don't mind making a comment on it. It's my own comment. It's sort of off the record in that respect. We have new fitness and probity powers being given to us 1st of December this year. Up until now, we haven't had any effective powers. We've only had a right to object to people holding positions on the basis that are very restrictive basis, so there would have to be pretty serious things had gone wrong in terms of maybe criminal activity and things such like, for us to have a legal jurisdiction over them. That changes on the 1st of December. CEO of AIB. That's a government decision. It's not a financial regulator decision. And I think there was a comment about the number of complaints. I'm not surprised. I mean, look at the state of the country. Of course, there's going to be a large number of complaints.
If I could just pursue it, I'm just wondering, would it be unfair to make a comparison, as Anne Good referred over lunch today, with you now have to be a fit person to run a nursing home. You know, would you foresee that kind of approach being applied to banks?
Absolutely. There will be a very detailed. We have a whole. It's been published very recently. There's pre-approved functions in the bank. So if you're going for one of those positions, you have to go through a very rigorous fitness and probity, which now gives us the power to actually reject people on a huge number of bases, from skills and experience, and all positions have to go. The pre-approved conditions will be interviewed, and there will be a process for that interview. There are also a lot of other positions which are called control functions, which aren't ones we interview for, but we have required the institutions to have their own procedures and policies in place in respect of all of those positions to effectively perform the same duties that we're conducting on the pre-approved conditions. And we will be reviewing and supervising all of the internal processes that the banks have in place to actually conduct those reviews of people.
Yeah, thank you. Terrence, will you take up a few of the points addressed specifically to you?
Yeah, there were a number. And I think part of the context for them is something we haven't actually discussed directly today, which is the character and depth of the economic crisis that we face. And I believe that what we're looking at is a national emergency in relation to unemployment and the shrinking of the absolute size of the economy, and the actions which we undertake need to be proportional to the size and most likely continuing character of that emergency. David Jacobson was telling me over lunch that Philip Lane, not a task-style economist by any means, has been predicting a 30-year period of adjustment as a consequence of the past 10 years of fiscal and financial profligacy. I think we need to do something serious in order to prevent any adjustment for taking anywhere near that long. What would have to happen? One of the things that has to happen in any financial crisis, in any credit crunch, is essentially to very quickly determine who's going to take the hit. Because somebody has to take the hit. That is, the value of these assets has collapsed. The value of somebody's wealth must collapse along with it. And what's happened to date is that the various sovereigns have been forced to take the hit, and some of them, most particularly the Greek sovereign, is clearly unable to bear that burden. It's not clear that the Spanish, the Italian, the Portuguese, the Belgian, and the Irish sovereigns are able to take that burden. It certainly seems that the French sovereign is unwilling to face up to its piece of that burden. Somebody's going to have to lose money here, and we need to face that. The good bank, bad bank proposal is essentially about that, and I want to address the very last question as to whether any of the money is coming back. The question is still, who's going to take the hit? And the good bank, bad bank proposal asserts that you need to separate the ownership of the banks, that nationalizing the banks which was the Labour Party proposal, is not a good idea. What needs to be nationalized is the good and useful pieces of the bank, which is the ability of private people to make deposits and the banks to then make loans in support of business activity. The rest needs to be separated out. And the losses need to go to the remaining bondholders. Now, there aren't enough remaining bondholders to take all these losses because we've paid off a good portion of them. The rest of the losses have to go to the European Central Bank, and I'm advocating this is done by transferring their deposits to the bad bank. I wish I didn't have to say that. It's much easier to force this on to bondholders. That's what should have been done. That's what capitalism is, in a certain sense, all about. A system which I don't actually support, but in this case, some of its principles should have been applied. As to where this has been done before in terms of public banking, again, as the provision of a utility, essentially, is not rare, actually. There are plenty of examples. North Dakota in the United States is one of them. My favorite example is South Korea in the post-war period, where you did not have private banking. You did have private capital for sure, but private banking is not essential to a capitalist economy. I think public banking would be a good thing. I think that it would increase the prospect of democratic control of the economy, but it's not so radical as to preclude further capitalist growth. I mean, in terms of pension funds, I think there's a lot of money illusion around pension funds. That is, what a pension fund currently allows the society to do is transfer goods and services into the pockets or the uses of people who are currently retired. That is, in order to do that, you have to produce a certain quantity of goods and services over and above those goods and services which are needed for those currently working and those currently underage. The exact same problem will present itself in the future. And it doesn't matter how much money is in any kind of pension fund. You might use the money in the pension fund to buy the goods and services, but you could just as easily create the money and use it to transfer it to pensioners. Pensions should be public and they should be pay-as-you-go. Funding pensions, I think, is really an irrelevance.
Okay. We've time for just maybe one or two more. Yep.
Andy Robinson. I work for La Vanguardia, a daily newspaper in Barcelona, Spain. I mean, I just wanted to, one of the common features of the sovereign debt crisis in both Spain and Ireland is the fact that it was basically a result of a huge housing bubble. And what I wanted to ask you, Shane, is to what extent was that housing bubble a result of poor regulation or supervision by the central bank? To what extent was it a problem of fiscal laxitude? Stephanie has commented on counter-cyclical provisioning in central bank policy. Spain actually had that, but it didn't. Well, who knows? Maybe things would have been even worse had we not had that. But I wondered if you thought that, looking towards the future, this boom-bust cycle caused by the impact of housing bubbles bursting on the banking sector can be avoided, and whether it should be done by further regulation or whether it's a question of using fiscal policy. Thanks.
Well, I think the question has two parts. You're asking me to proportion the causes of this almost in percentage-like fashion amongst the various institutions involved. That's a bit like Stephanie's last question. I think at this stage it's almost impossible to do that. And I think the central bank's faults have been pretty much put out in the open in the various reports that have been prepared and published. I honestly don't know how much of it was due to that, but certainly some of it. A huge amount of it was also due to government actions, and a whole lot of it was due also to the introduction and the euro and the way in which the markets reacted to the euro, and the way in which the financial institutions and the borrowers took advantage of that, and the general change in attitude to pricing credit in the markets during that whole period as well. It wasn't just in Ireland, it was international. Iceland is a testimony to that. So it's a very complex situation, and that's the best I can do with that question. There was another part to the question, but I can't remember. Anyone remember? Do you remember? Andy, do you want to repeat it? There was a second bit to it, I think. I can't remember now.
Maybe you could address the issue of counter-cyclical. Could you develop counter-cyclical provisioning that would actually stop housing bubbles?
Yeah, right. I think you can develop counter-cyclical provisioning which will help that. I think it really is not just going to be financial regulation in that sense that prevents that, but it's really a much greater financial stability interaction with financial regulation that's going to hopefully lay these areas open before they result in disaster going forward. And in the central bank, we've begun to try to seriously coordinate the activities of the financial stability, the economists, which kind of often sort of sit in their ivory towers and present reports and models, but try to bring that to reality, to what's actually happening in the market, and to marry what we're doing with what they're doing. And I think that close cooperation is going to be critical going forward. Also, a very close, as I said, a rebalancing of the powers between central bank and the other elements of the equation, i.e. government and banks themselves. I think that will also lend a lot to prevention going forward. And I think I think ultimately it depends on the laws that are there to allow people behave in certain manners. So again, back to Eleanor's earlier statement of trust and coercion. That has to be, it's a fine balance, I think.
I'd just like to take a moment to support some of those comments, actually. I don't think that the problem was fundamentally a financial one. That, again, the context within which we're speaking is a context of a crisis of major proportions. A crisis which is not historically unprecedented, and which has, of course, attracted some comment. Previous crises of a similar nature were the stagflationary crisis of the 1970s, the Great Depression of the 1930s, and the Long Depression of the end of the 19th century. Those particular crises were all crises of the preceding stage of capitalist society. That is, there's a particular set of institutions through which the process of reinvestment and growth took place. And those institutions were economic, but also political and also ideological. The current crisis which we face is a crisis of global neoliberalism. It is not primarily a financial crisis. It's a crisis of the entire preceding stage of capitalism, which dates from the early 1980s. It is not going to be resolved without a break with neoliberal policy and the particular form of globalization which we face. Rising inequality, sluggish investment, and financialization, as well as market fundamentalism, were underneath this crisis. It's not going to be blamed on the financial regulator. And I think it's a distraction to do so. Major fundamental changes in the way this society is organized and the way in which global capitalist society is organized are absolutely essential to any kind of recovery from this crisis.